Hey everyone, I've been asked to put together a video on fib scalping. Um, so first things first is let's talk about what represents the front side and the back side of price ranging. So as an example, right here as price is moving up, broadly speaking, this is the front side of the range. Any shorts that come about as that price is going up are based on whatever was back here and whatever was all the way back here. So they would be the back side of the range, and this would be the front side of the range. So let's say we are creating or looking for some trades that we can, areas of support that we can take fib scalps on after it creates this. So we're here. So the first thing is we look for engulfing candles. So we've got one here, got one here, and we've got one here. Now, pretty much anything below this top trade here, I would consider a backside part of this range, because the only way for that price to actually come back down to here is for it to actually engulf in the other direction. So therefore, this would be classed as backside on some lower time frame to whatever's up in there. And so certainly this would as well, because it's so far down. Now, there's other areas in amongst all that where price can bounce, but we're just going to try and keep this quite simple. So we've got three areas marked out. What we want now is to put a fib tool on those. There. There. And we'll put one all the way down here. Okay, now the settings for this fib tool are a little different, so you don't necessarily need all that to do this, but the rest of that's quite important, so we'll just turn all that off. And always pause the video and copy those settings if you want to. So now what we're looking at is when price revisits these engulfed candles, which as you can see, nothing has done any of those. So, this price went up, it engulfed it, next one went up and up and up. Nothing has gone back and re-entered that candle or that candle or that candle since creation. So effectively what you're doing is you're looking to see what where the trend is and whether or not it's going to obstruct the bounce of these. Sorry, my OCD is just kicking in, so I'm just deleting these lines. I just don't feel like I need extra lines there. So there we go. So when the price comes back into this area, we're looking at getting an entry somewhere below the 1, and we want to run it back up to the 1618. So let's see what happens on our next few candles. Yeah, so as you can see, it's engulfed to the downside. So our trend is turning. So this is now starting to look to come down. And there we go. So we get our first entry. In this case, it's come all the way down nearly to the 0 there. So let's have a look at that on a lower time frame. So up here on a daily, that to a 1 hour. Sometimes it's hard to tell whether these candles went up and down in the same thing when you're using replay tool. So we'll put our vertical line there so we can see our point in history. There somewhere. Okay, there we go. So as you can see, that very, very first wick, which is all inside this big blue candle, you can't really make it out when you look at it on the daily. But as you can see there, it went down, didn't quite make it to the 0.5, and then it bounced back up and closed up over the 1618. So that's your scalp. You're looking at getting an entry anywhere below the 1, and you're looking at taking your profits at the 1618. Now, what you can do is you can look to try and find the trend. Now, on this particular one at the top here, there isn't really a very identifiable trend in here because at that point there is only one yellow candle. But if we just skip it forward a little bit, see that one. So this trade would have been completed, and then the price went further down. But at some point, it's going to create a trend. That's the trend. So now we've got a downtrend to compare to our various fib trades that are in the background here. And technically, there's actually another one that just happened there. So this candle was a relatively risky one. So it had this engulfment. It's got this trend. Technically, because the candle that created the trend, the new one opened on the top side of it. So it went down, hit it, went up. That trade was able to complete. So that was 234 up to 241. If you're taking them on the front side of the range like that, you just need to be very careful that you have studied and practiced how trends affect candles and effectively where the candle actually opens compared to where the trend is. So that would have been a very risky one. Whereas taking them on the back side of the range, like back here, much safer. So our trend has moved, so that goes up to there. Let's get rid of this blue line for now. Get rid of this for now. So you had one very low risk scalp achieved, and you could have taken that, but like I say, very high risk scalp. So your next one's down here, and so all you're doing is you're just waiting for the price to come back down to that level. As you can see, it's rejecting off the new trend. Didn't enter. That did. Okay, now it doesn't take, we don't need to go back to the lower time frame to see that one played out. Not only did it move from the 218 to the 221, which is the fib move itself, but effectively what hold levels are designed to do is they are designed to attack trends. And because our trend was so far up here, you can see it actually went from there all the way back to there. So there is fib trading is effectively the same as trading holds to trends, except the way price seems to get structured on a chart is that about 94% of the time, the trend will never ever be within the distance of the 1618. So therefore, if you're starting out and you're not really great at finding trends or identifying where they are, particularly because they can get very messy on lower time frames, just taking a trade on the backside of a range with a fib is actually a very simple, easy trade. Once you get a little bit more advanced and you know that, hey, I can identify a trend, I'm really sure of that, then what you are doing is you're taking your entry below 218 and then you're TPing when it touches the trend at 234. And it might take time to get to the trend, so you've got to manage it. It doesn't necessarily mean it's going to go up one candle like that. It could take several candles, and it might hit the trend over here at 227. But as you can see, this targets this. So that's that one done. Now, either that trend breaks or that trend continues to reject, in which case your next support levels are going to be down in this area down here. Let's just oh, yep. So we moved our trend. Trend is now up there, and it's got a really big wick on the top of it, which is never great because that means it's resistance effectively for the future we run into. Short this stuff, by the way, but that's a whole nother video. So okay, we're coming down. So now it pays to put your interior trends on. So yellow to yellow, that. Because you've got a trade like this one. as an example. And as you can see, the 1618 and the hold level and the trend quite close together. And so this is the front side of the range. It's a risky one to take, but each to their own. Let's see. Yeah, we might need to have a look at that on a lower time frame and just see how that went. But, that candle there. Where are we? Yep, yeah, that played out. So hit the one, came back up, hit here. So similar scenario, the candle entered from the top side of the trend, which gave it the ability to actually get back up and hit the target. So that one played out. Oh, yeah, there it goes. Okay, now this has relocated your trend, so we'll take this trend and we'll move over to here. It's our new trend. And our next hold level is all the way down here. This is a frontside hold level. The price will bounce off things through here because of the FVG and such, but that's a whole nother video. Let's not go into FVGs for now. So, get rid of that one. We don't need that one anymore. I don't know how many good trades we've just taken then, but we've taken 1, 2, I suppose there was one in there, 3, but that would have been really high risk. So 4, got that one. Yeah, so now we're heading all the way down to here. So let's see what we get. Okay, so you got to keep a bit of an eye on these trends because the last thing you want to do is take a fib trade straight into trend resistance. So that's now, as you can see, it's becoming a bit of a parabolic dump. And by the way, these things work in reverse. So this is a whole candle. Up here is a whole candle as well. So if price went back up to those, you would have to have your support trends mapped out, but there would be shorts that you could take on those candles. Zoom right in on that little fella because that might that open on the line. Yeah, that opened on the line, so that doesn't move anything. So you could look to take one on this candle down here, and your trend is far enough away. It's probably it's a front side, so it's high risk, but see what happens. Get to it. That move there is that one. But that would have been quite risky because it started just on the line. So personally, I wouldn't have taken that. Would have been better off taking the short off that, which is what this is. So can pretty much get rid of this one now. We can move this one there. No, that's clear of the line. So this one can move. So with these trends moving very far away, candles like this one and this one down here should be quite safe now. Very small little moves. That's targeting this hold. It's not moving anything. So that's broken our exterior. So that's now over here. It really looks like that's going to take off. So now this area down here is effectively becoming the backside, and this is the front side of the range. So we're getting little rejections off this, but we would also have some kind of support trend in play, which is there to there. There. Okay. So just as an example, this is probably one that would have failed. So this candle is the entry candle. This candle here, this pullback and close creates the trend, and it breaks the trend which moves to there, but I don't know whether that's going to then get to its target. So its target's down here at 208. Because it spent too much time there before coming back to 208, it created a trend that actually could stop that move from happening. So yes, of course, it went all the way back in that one candle. So let's just double check that. Find our blue line. Okay. No. So that candle opened, it went up to the one, it failed to get back to the 1618, then it went up to the 0.5, and then it must have come back down afterwards. So let's just play that on. Yeah, there it goes. So moves the trend, comes back down. So that one there was a very, very risky trade to have taken, because as soon as it actually closed this candle, you would have been better just to exit that trade, because there's no guarantee that that was then going to happen and then that was going to happen. It could have just continued to follow this trend up, leaving you in that position and not a good state. But we're now back to looking for things along here, because we've rejected from there and we're coming down. So let's hit play. Okay. And that's that one. So this one actually dived the support trend. So instead of just taking a $2 move in there, because the candle started from up here, came all the way down, hit the hold level, typically those candles would actually retrace to the trend. So you would keep that one open a little bit longer, close it when it comes back up here and retouches the trend. So I'll show you that on a lower time frame. You can sort of see how that plays out. Comes down here, enters the hold area, goes actually quite deep in this case, comes all the way down to nearly the 0, and then goes back up to touch the trend before further rejecting. So you could take that as a scalp just between the 1 and the 1618, or apply a little bit of trend theory. It was dived from the other side, candle comes down, enters a hold, retraces to trend. Now, because it closed under the trend, that's why you're then going to get further dumped to the downside. If it had gone back up and closed over top of the trend, it would have pumped up and hit this target up here. but that's a whole nother video. So just hit next. Okay, so it has not gone into that bottom one. Right. So just get rid of that interior. Just adjust that support trend to there. And we need to add the new interior resistance, which is that one. And we'll get rid of that. And that. All done. So that did not enter the one yet. So, and as you can see, the trend resistance is quite steep. So this is actually pretty risky, depending on how much time it takes. And if that comes back a little bit, then opens the next one. But we'll see how that goes. It looks like we're going to move our trend out. Excellent. So that moves to there. That gives us a bit more room to play. Oh, what a dive. Okay, so that went through everything and then back up again to trend. So how did that actually look on a lower time frame? Candle. Yeah. So into the one, took a really big liquidity sweep, and then came back up the 1618. You probably would have got stopped out on that without a doubt. It didn't really even try to get back up to the 1618. It was effectively stuck under that trend. So those are the kind of ones you want to be very, very, very careful of. I don't think it actually entered that bottom one either. It didn't enter our bottom one. So let's see. Yeah. So if your position sizing was very small, that would have played out. But effectively, it was part of a liquidity sweep. So it went very, very, very deep. Way down to 168. I imagine most people would have been well and truly stopped out on leverage by the time it had done that. Let's see what happens next. So after doing a liquidity sweep, we're going to want to target this or this. Yep. So if you were to take that one, okay. As you can see, where's our one? Yeah, so we entered there. It went up to, didn't quite make it to the 0.5. Went up, sort of ran into the trend actually as well. So that was a bit of a stopper for it, but went up, came back down here to the 1618. Trade done. So this one here, there's a trend which was going to reject. There's a whole candle that's going to reject, and your support trend is all the way down here. So there wasn't really anything that was going to stop that one from moving from 213 back down to 207. It just did its thing. It's that one. We still haven't revisited these bottom ones, but that's the way fib trading works. Have a look. It's been when we went off to all-time highs. Okay, so based on that, you've got one sitting up here at about 252, which you could look at taking if the price decided to go back up. It will probably bounce off that, but it's not one I would take, just because it's not a properly engulfed candle. And then really it's all the way down to this one again. So not a lot of support on this on the daily. Trend has moved. Yeah, it's caused that nasty rejection. That. Just get rid of that for now. Yeah, so this bounce is to do with this in here, but like I say, it's not. You can do this as long as this is clear. So you can have two going like that over one. This wick cannot be touching the back of that, and you wouldn't even really want it to be touching the wick because it's effectively you're taking it sort of based on the fact that there is some other fractal time frame in there that is engulfed, where these are slightly less minutes and that's slightly more, and that's what you're actually trading. But for the most part, I just wouldn't recommend you take those. Right, finally. So we waited a really long time and price came down and it hit this one from all the way back here and went down just below the one and then came back up to the 1618. Of course, you could check to see where your trend is. So it was there. Yeah. Touching. Yep. It's touching. Yes. This moves to there. And then we get an interior there. Actually, we don't really need to worry about that one because it ends up moving anyway. There. Okay, so the most you could actually safely take on that is back to trends. So there's our entry. A blue line. And there's our blue line. Yep. So got your entry, got your 1618, got your trend. And it kept going higher, which is great, but that's just trading hopium. The move that you're looking for is between here and here, or magnet tool. You want to be able to move between those two numbers, and at most, look for that up there to your trend. which in this instance is twice the size of the reward, so it's not a bad thing. But the thing with trends is that it's effectively time versus price, so it's coming down like this. Nothing stops a hold level from going down and then hitting a trend, then dumping. And where it hits the trend may be at a lower level than where you entered. So it's always a good idea to look to take some profits at the 1618, even if you are targeting the trend. And then from that point, you can let the rest of it run to trend if you believe that's where it's going to go, or you can set your stop loss here. It might revisit and stop you out, and then go to trend just to be a little pain, but that's trading for you. These things happen. Right, so there's a whole bunch of examples. Hopefully that sheds a little bit of light on it. Sorry, I've just sort of freestyled this and haven't really planned it. So let me know whether or not there's anything more that answered. Or, look, if you're not already in the Discord, join the Discord. There's plenty of people in there that know this stuff. Yeah, ask away. Yeah, we'll see you again. Cheers. Bye.